The Reserve Bank has cut the cash rate by 0.25%, taking us down to 3.85%. Now, with 2 cuts done already, are we going to see another 2 this year? And what can you do in your own journey to make sure you're getting the best interest rate and make sure that you're making progress in terms of your property portfolio to make the most of 2025 in your investing journey and leading into 2026? Now, my name's Luke and I talk all things real estate, renovating and financial freedom on this channel. And if you're interested in a Brisbane-based buyer's agent, head over to purposeproperty.com.au. So how much are you saving based on these interest rate cuts? I've run the calculations on my own property portfolio and I should be saving around $10,000 a year based on just a 0.25% cut across all my debt. What this means is every rate cut this year is going to save me $10,000 annually in terms of cash flow, which could mean a $40,000 interest bill saving by the end of the year, obviously after a 12-month period of time has lapsed from those cuts. Now, for the average Australian carrying a $600,000 mortgage, they're going to be saving about $1,200 a year or $100 a month or $25 a week. So not a massive saving, but this adds up when you've got a bigger and bigger portfolio. So with my portfolio sitting around the $9 million mark at this point in time, and there's a significant amount of debt attached to that portfolio, there's going to be some big savings on my end moving forward, which is pretty exciting. As they plan to make future rate cuts, it's only going to improve my personal portfolio's cash flow. Now, part of the strategy behind this is refinancing with different brokers and banks to get yourself the best interest rate, but not only that, get access to more capital to make future acquisitions or just to give yourself a liquidity buffer. And this is exactly what I'm doing in 2025. I've made 2 purchases this year in Ipswich City Council on the western side of Brisbane, about 45 minutes from the city, and I'm looking to make another purchase in a major capital city market later this year or early next year. And so part of my process of achieving that goal is refinancing deals that I currently have on lower interest rates and taking those back to 80% LVR, drawing out as much cash as possible, using those funds as deposits for this next property purchase and as a liquidity buffer. So let's look at an Australian that might have $1 million home at the moment and $600,000 of debt. So the example debt that the average Australian might have. Now, they're saving $1,200 a year on their mortgage now, but if they have the ability to service and refinance, the average Australian might be able to increase their debt from $600,000 to $800,000, draw up $200,000 of equity, and go and use that $200,000 to buy an $800,000 house. And this is exactly how you start and scale a multi-million-dollar property portfolio. You start with the equity in your first or second property, you draw out the equity from each of those deals, and then you use those funds as a deposit on the next property purchase, obviously assuming that you can service all of that debt and that the rental income plus your day job income is adequate to cover the cost of that property portfolio. Now, it's easy to understand intellectually, but it's a lot harder to execute. And this is why I run a Brisbane buyers agency and why we help everyday Australians buy and invest here in the Southeast Queensland market. Because it's easy to understand these concepts. It's easy to understand that you need to sit down with your mortgage broker, draw up equity, and then go and acquire the right asset, but actually executing on it is a lot harder, and therefore that's where our services as a buyer's agent can be very useful to some people. Now, I'm very honest in saying that not everyone needs a buyer's agent. If you can do this on your own, you can do the research, you can chat with the brokers and the banks, and you can execute on the right property deal for your property portfolio, then go out there and take on that next step. That's exactly what I'm looking to do moving forward. So I'm actually going through another refinance process right now. I've reached out to Nevada from Cube Home Loans. And if you want to work with my mortgage broker, head over to purposeproperty.com.au and click on mortgage broker. And you'll be able to book in a chat with Nevada or the guys at Cube Home Loans and begin your next steps there. And so I'm sitting down with Nevada and the team at Cube Home Loans at the moment, giving them my documents, explaining what properties I want to potentially refinance based on the bank valuations and based on my personal serviceability, and then looking to draw out equity to be prepared for my next property purchase. Now, you might be wondering exactly where I'll be making that next property purchase, and it's likely to be in Melbourne or in regional Victoria at this point in time, but we'll have to wait and see, and I'll reveal to you very soon some recent purchases that I've made in Ipswich City Council, and then as I look to make the next purchase, whenever that is, I'll be willing to share that with you guys here on the YouTube channel. because I'm about being open and transparent as possible in sharing my journey and what was Emily and my journey as a couple in building out a property portfolio to create more choices. But now we have a clear Reserve Bank decision on cutting the interest rate down to 3.85% for the cash rate. That means the average Australian will be paying around 5.5 to 6% for a standard home loan. Now, some of my interest rates are a little bit higher than that, 6.5 up to 7.2%, but I'm expecting all of those to be cut by at least 0.25% in the near future, and maybe a little bit further if I'm able to refinance on some slightly sharper rates, which is possible when you work with a good mortgage broker. But the expectation from a lot of the big banks at the moment is that there's going to be further rate cuts this year. So on screen, I have CBA cutting rates each quarter, taking the cash rate down to 3.35% by the end of the year. And that prediction so far is coming true. We've had 2 rate cuts so far, and we're expecting 2 more in the near future. Westpac predicted some heavy cuts, May, August, and November, but at a 0.5% rate, so that was down to 2.25%. I think that's probably pretty unlikely that they're going to be a 0.5 cuts. I'm expecting only 0.25 cuts myself, based on where the RBA is heading and based on their reasoning for making these cuts. Now, some of the reasoning behind the RBA making these decisions is to protect indebted households from a potential economic challenge and to help sustain economic recovery. The RBA also noted Australia's economic outlook has generally soured or been poor in the past few months. And finally, ANZ had predicted 3 cuts this year as well, similar to CBA, taking us down to 3.35% by August, which was a little bit more aggressive. And then by the middle of 2026, down to something like 2.6%. So the RBA is actually taking action and cutting rates. We're following locations like New Zealand and the US and Europe, and it's very interesting to see this play out in reality. Now, the expectation is that we're going to see 2 more cuts this year. Another 2.5 in August is my opinion, and another 0.25 in November. And this means that the cash rate will be around that 3.35% by December or by Christmas. And that means that the average Australian will be around that 5% mark in terms of the actual rate they're paying, 5 to 5.5% by the end of the year. And that's relatively affordable. If you look at yields in Brisbane, the average house is going to be 4 to 4.5% in terms of a gross yield. And then if you're adding on a granny flat, you're going to take that closer to the 6% mark at this point in time. So I'd love to hear your thoughts in the comments below. Do you think the RBA is going to make further cuts this year? And make sure you give this video a click over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.